What's up, guys? We are back for another live. Just want to shoot up a little update on the market. And another thing going on, Fed raised rates last week and wanted to talk more. This was pretty much expected, guys. They like to think that they're going to maybe they'll pause. It's like, no, if literally they have percentages on whether they're going to dictate a raise or not. It was like 92% or 90 plus percent. They were going to raise rates anyway by 25% percentage points. Now, does that directly affect interest rates? Yes and no, because you have the 10-year treasury also, and it kind of dictates the future. Does it look like in the future, is rates going to go up? Well, you can look at what is the 10-year doing. Now, if it blips up a little bit, yeah, they think that rates are going to go up and they may trend up. And I do see rates going up. I mean, you see a lot of rates with a 7% on it now. In the commercial world, maybe you can get mid to high sixes, but you're seeing things with the 7% on it in different markets and different banks. They're pitching 8%. So, guys, the Fed is going to continue to raise rates until they feel like they have a total grasp on inflation. I think they're even going to go a step further than that, though, and they're going to drive the rates up and up and up, and making things more affordable, raising the cap rates. So the big prediction is, are they going to raise rates again by the end of the year? I think one more time, probably. They said September, November, maybe both. They don't really know, and I think they like leaving us in mystery. But the stock market's baking in. Looks like one more small rate hike of maybe a quarter, maybe it's an eighth of a point. So nothing dramatic going to go on with the interest rates. I think they're at a restrictive rate, which they like because they see things slowing down. It's getting harder to build anything because you can't get things to pencil. You got to let inflation catch up, meaning rents are still rising. And you got a lot of sellers right now that are being a little greedy because they can be, basically because they don't have to sell. And if you want to buy it from them, you got to buy with a super high interest rate. So it's going to be hard for you to make this pencil in your eyes. There's people in some markets, guys, that are literally like, how much do I got to pay each month to own this property? Like multifamily property. They're buying things at 5.5 cap still. And that meaning if you got a property at 5.5 cap, and you're borrowing money at 7+%, there's a spread there, right? They're not able to lever these properties very hard, or if they are levering the properties, they're going to be able to pay. They're not going to meet their debt coverage, meaning the money the property produces will not even make the mortgage. So there's just a little tidbit there for you. So if you don't know what debt coverage ratio is, probably look that up. It's very important as a real estate investor today, and some you guys should pay attention to. But we got home affordability at an all-time low right now. Why? Guys, there's no freaking supply. Think about it. And there's so many people right now sitting on those 2-3% mortgages, maybe 4%. They can't even move if they want to move, right? Like I can sell my $500,000 home with my 3% mortgage, but I can only afford like a $275,000 house with a 7-8% mortgage. Doesn't make any sense. So when you see interest rates drop in the future, they're going to drop, right? Like macroeconomics tells us they're going to get inflation in check and they're going to drop interest rates. And even the Fed shows these are dot plot maps that they show, and somewhere in 24 they're going to start dropping rates. And in 25, I believe rates will be coming down quite a bit. And when you do this, you understand that no one can move. And when the rates start dropping, guess what's going to go up? There's going to be a flood of homes on the market, and there's going to be a flood of homes getting bought up too. So that's where things are at. Like home affordability is literally at an all-time low. If people ask me, should I buy or should I rent? I'll tell them rent 100% of the time. It is the most unaffordable time in history to ever buy a home. I'm telling you that the average in the U.S. is $2,700 as a mortgage in the average. And the average to rent is $1,700. It's a $1,000 gap just to own a property versus just renting. It does not make sense. If you're just buying the home for you and your family, or you and your boyfriend, girlfriend, whatever, don't just buy a home right now. telling you it's not the best. If you're going to house hack and you got different plans, you're going to buy and keep turning these or flipping the 𝗏 method, you're just fixing it up, rehabbing it, renting it, refinancing it after a year. Guys, do the methods. Those are not what I'm talking about. If you're going to just buy a home right now, I would tell you just to pause and think about what you're doing and go find a better property you can literally rent. So what should you be investing in? Like I said, I talked about some of the 𝗏 methods. I invest in really boring shit myself. Like I do multifamily class B and C and storage. Why? Well, I just believe that I never got into the duplex and single family homes. And that's probably because I was just uneducated when I was 20, 22 years old. I probably would have done things a little differently. I did buy a home using creative finance when I first bought a home, back when I was 21. But things have changed. I think I just didn't understand how you just stack up all these single family homes, and I'm in North Dakota. I didn't really understand how that would help comprehend wealth. And I thought you needed more money to do it. You really don't need a lot of money to do it. But I have a lot more education, and I think it's even having more doors in multifamily has been better for me as an investor. And I like storage because I think they're both recession resistant. I see both my storage and multifamily properties still doing well today. And I see there's a shortage of multifamily because there's a shortage on building, because there's builder regulations. It's harder to build things nowadays. I see shortages on storage still, even though you think storage is literally everywhere, there's still a shortage of it because people need places to store things. Housing is getting more dense as an overall. I tell people all the time, I was in Ryan Pineda's podcast, I was saying $1 million homes, literally you can still reach out with both your hands and touch each building. Like the housing is still getting denser and denser and denser because space is costing a lot more money. People always want more bang for more buck, meaning you need a smaller lot. People in Arizona, they have very small lots. It's literally, you just have enough room for a pool and a patio around it, and that's it. That's $1 million, maybe $1.5 million home. And I know in the Midwest, we don't quite understand that, but you see smaller lots, a lot of, smaller homes, tiny homes. You get all these different things, but they're just trying to build in efficiencies. But what you see as an overall is things are getting more dense. You see a lot more multifamily. You see a lot more HOAs nowadays where you can't even literally park a car in the driveway in some of these HOAs. You have to literally park everything inside a garage, or you have to go store it in some storage unit. And you see a lot more places going this way because people don't want to take care of anything anymore. They don't want to take care of the yard. Like they don't want to take care of more landscaping. They just want it all done for them. They want to come home, hang the coat up, whatever, and relax and do whatever they want to do. They don't want to spend any time on their houses and fixing up stuff. And that's just the way the society's going. So by realizing that, I think storage is still a really big game because as people want to still own things, they're going to need a storage unit just to help comprehend some of their assets. Maybe it's pickups, cars, RVs, whatever it is, they still need to store things. That's why I think really boring shit, being multifamily, B and C, and storage are really great assets to own with your capital. Now, can you buy these properties? Say you are 22 and you're like, yeah, hey, I want to do this myself. I don't know where to start. And, do I need millions of dollars in the bank before I buy them? Well, the uneducated viewer would say, okay, there's $1 million property. My uncle owns or whatever, and I want to buy it from him, but the bank said I need $300,000 down to buy the property, meaning the bank's going to be your partner. They're going to, borrow you 70% of the money, but the other 30% you're going to need to come up with in cash. So their thought process is, okay, I need to save $300,000 before I even approach that next situation. The problem is it's going to take you a very long time to do that. And you'll probably never get to that point because by the time you get to that point, that property is already worth $2 million. And you're like, shit, now I only got $300,000. Now I need $600,000, right? So that's kind of the problem. What you do find out right now is that baby boomers are retiring, 10,000 people a day, right? Like maybe his uncle wants to retire. his problem isn't necessarily that he needs to sell the property. He just wants to exit the property and have as much money as he can. But maybe it's a monthly amount of money that he wants. So maybe we say, hey, uncle, I'll give you, $1,050,000, I'll give you over what you're asking, but can you borrow me the $350,000? Since you have this place paid off, I need some help from you to get the deal done. So why don't you sell or finance? I'll give you a little more money on the deal. And since interest rates are so high, I can't pay you any interest rate on the money, but I'll give you a little more money for the property, right? And uncle goes like, well, yeah, I've never really considered that. Can you do some down? And it's like, yeah, maybe I can do 20 grand down. Maybe I can only do 10. And this is just where you got to start. Maybe you have to give them 1.1 million and you're like, all right, I'll give you 1.1, but you got to spread this out. So I'll give you like $3,000 a month. Maybe it's only $1,000 a month, whatever you can provide cash flow from the property. So you're not coming up with money out of the pocket, but maybe you're willing to take on the risk. And maybe you need him to sign on the loan, right? Like maybe that's worth something. So maybe you're like, yeah, 1.1 million, here's the deal. I need backup on the loan and I'll get you 1.1 million. I'll pay you this so much a month. And hopefully I'll refinance in 5, 7, 10 years and I'll have you completely out of the deal. And maybe it reduces the tax liability for him because he's probably got recapture. So, just telling you that it can still be done, right? And you have baby boomers retiring every single day. Literally 10,000 of them retire every single day. And they own very little leverage on their assets because that's the way they were brought up, not to borrow a lot of money against these things. So they have them paid for. So one of those deals, guys, can change your entire life through and through, right? In 5 to 10 years, and you got that property taken over from your uncle, you own it, your life can change dramatically, right? You might have an asset that's worth 1.5 million. You paid your uncle back the 370 or the 350 or 400,000, whatever you borrowed from him, and you might have a big asset just to yourself. It could completely change the legacy of your family and the way your retirement looks in the future. But if all this sounds like a lot of work, and it is a lot of work, real estate is not passive. I don't care what they tell you. There's not mailbox money. None of it is. We are working every single day to refine our storage parcels, our multifamily real estate. Even if I have property managers in place, I'm still hearing about issues. I can't fill things fast enough. There's a property on a piece of real estate. We need some funds to reallocate from CapEx to fix a roof, whatever. It is anything but passive. If all of this seems really overwhelming and maybe you have a really good W-2 job and you're like, hey, I want to invest in real estate, but I'm not really sure, like I don't want to go fix up properties. I don't want any calls. This is a numbers game to me. I want some exposure to real estate. But I don't want to do anything. That's why I created Mac Capital, more or less, so more people can invest beside me in real estate I'm doing today. And so I have a 22 unit deal that just came out as a 506C, meaning accredited investors only. So you got to make a few $100,000 a year, and a net worth of over $1 million. So, you get narrowed down to 1% of you out there that can qualify for that. But, we only need like 5-6 investors left and we're done with this deal and we'll be moving on. But if you are interested, I have a 22 unit deal that also has another asset with it, a 3.85% interest rate loan fixed for the next 5 years. That in itself is below inflation reading at what it is right now. Well, what's inflation on the headlines? 3.1. So, you can think if you take 3.1% around minus 3.85, we're borrowing money for damn near free. This is a great fixed loan. It's an 8% preferred deal. And sorry, but it's to accredited investors only as a 506C. But if you want, DM me the word passive and I'll get you the link on how you can get into this investor portal and you're able to search for the deal yourself. Of course, you can get into our investor portal and you can invest. The minimum on that deal is $50,000. So, we're only looking for, again, it's accredited investors. So for the minimum, that's kind of our minimum on all our deals. So, anyway, DM me the word passive if you want to, if you're not able to do this yourself, but you're interested in investing in real estate, DM me with the passive. I have a webinar coming up Wednesday where you can join us. And I will talk about that deal through and through. It's here in North Dakota, which is a super investment friendly state. and gives you exposure to a different area where things still make sense up here, right? Evaluations haven't gone all screwy. Of course, it is getting weird and different. I know in the Sunbelt markets, almost nothing makes sense. So you got to look at these tertiary markets outside that Sunbelt, and look into the Midwest where you actually got cash flow. So anyway, this deal is a really good deal. We developed all this deal together. It's, I think 85% occupied, so we're almost fully stabilized after a new deal. So guys, we're hoping to fill this thing up. We got a couple of units to fill. And if you are looking to invest in a really good deal and don't have the time to do it, DM me the word passive. See you guys next week.